Welcome to the W.T.F, Where's the Focus podcast. I'm going to bring you a weekly short message on where you put your focus as it relates to sales and building successful business relationships. Knowing where your focus goes, your energy flows. I'm Dan Manginelli, the author of the books Wake Up, Jumpstart the Life You've Always Had in Mind, and Shake It Up, Big Dreams and Bold Choices on the Road to Success. A national speaker on staying motivated and inspired with the right mindset and coach top salespeople around the nation. So let's get going with W.T.F.
And the crowd goes wild. Welcome to the W.T.F. Where's the Focus podcast, episode 7. We are on episode 7. Can you believe that? 7. We're on a roll. What do you think there, V?
Oh, wow.
Way to show
7. Wow, 7 episodes already, Dan. Amazing.
Master V on the board. Crazy E doing productions. This week episode, hopefully we get the video to match the audio this time.
That's right, boss.
You think we're going to work on that a little bit there? I'm going with the captain, the Kareem Abdul-Jabbar jersey this
That's
week.
a classic right there.
It's the classic. It's the killer.
Yeah.
Let's get a little better this week if we can. So I'm going a little bit of a different direction, as much as we love what I'm doing and how I'm doing. But let's go with this. 35 years experience in the mortgage industry. I'm kind of asked every day, what's the market going to do? What's inflation? How does it affect purchasing homes? What are interest rates? How are they going to do? Where are we going to go? What direction is everything happening? So this week I'm going to give you a little bit of my take. Again, my opinion from stats that I have. So let's kind of jump into it a little bit there. So when you look at things like the annual inflation rate in the United States right now is 9.1%. For the last 12 months, ended in about June. It's the largest increase since November of 81, after rising about 8.6% previously. It's according to the U.S. Labor Department. It was published, I think, in July. So what causes inflation? That's a great word. You hear it's a buzzword right now, and I'm going to use layman terms on things that I can understand. So what causes inflation? Basically, it's too many dollars that's in a market that you have money to spend with not enough goods to buy. It pushes some prices up in the demand of goods, so it increases on things that we're going to buy. As everybody knows right now, we've had too many dollars in the market. What I mean is, through the pandemic, the government gave people a lot of money. Some people needed money, some people took money, some people really didn't need money and took money, right? So you have all this money in the marketplace that was given to many people. So we gave all the money out there, and we said too many dollars, but we said you can't spend it. Everything's closed. The world's closed. We have all this money, you can't spend it, so hold on to it. And then all of a sudden we say, you can spend it. And then people go, okay, I'm going to start spending, I'm going on vacations, I'm going to buy things. And besides just the things that they had, they actually have bought probably a little over their means and put stuff on credit because credit was so cheap to have that I can go do that. So prices went up. There weren't enough goods to spend it on, and then increase the price there. So that's kind of inflation. So does that mean we're headed for a recession? That's a great question too. So a recession can be caused by kind of an overheated economy in which demand outstrips the supply. Expanding the past full employment to the maximum capacity of the nation's kind of resources. And overheating can be sustained temporarily, but eventually spending will fall in order for supplies to catch up to demand. Kind of the same thing as I just talked about. But there's also a bunch of things that come into the recession when you put it that come into play. A loss of confidence in investing, loss of confidence in the economy, high interest rates, stock market crashes, falling home prices, manufacturing's orders slow down. There's a lot of things that would come into play on a recession, and I keep going on that. But historically, the equity price bursts occur at on average about 13 years. It lasts for 2.5 years. And housing prices bust, a lot less frequent, but are twice as much, that lead to longer output and larger losses. And then you look at interest rates. The Fed have raised the interest rates, 0 to 1.5%, which they are today, and that happened at the beginning of this year in March. They raised them, and they kept raising them. And we're in July, and I'm doing this podcast there, and it'd be tomorrow, which when you listen to this, it might be past that. The Fed's probably increased the rate a little bit more. Somewhere maybe in the 2.5 range or the 2.25 range. I don't know, but that'll be the fourth increase for the year. So are we headed for a recession, Dan? Right? Well, Treasury Secretary Yellen says it's a slowing down. It's not a recession. Everybody just relax. We're not headed for a recession. We're just in a slowing down period. Now, I don't have the answers. But I do know if you look in the past, when people look at the past for the future, from the 70s to the 90s, inflation went up. The Feds raised the rates, which slowed down the spending. Inflation dropped, mortgage rates came back down, the stock market didn't like it, and sometimes it crashed, and then all of a sudden they said we're in a recession. Now, is that to say that's going to happen again? So what does that have to do with interest rates? What does it have to do with real estate values and sales? Here, listen, rates are going to go up, then they're going to come down. Values are going to go up, and then they're going to decline. The potential homeowners who want to accumulate long-term wealth and live in a home of their own are going to buy real estate no matter of either of those two things, of prices or that. Now, we all have this idea that we want to buy at the lowest and get a deal and wait for the right time to pull the trigger because I want it to get to the bottom. I don't want to be buying at the top. And things happen faster now in life than they ever have, if you think about it. Think about the times that things happen and how fast they happen. Right now, there's 10 different channels that we all get to our smartphone to give us news about what's happening. It used to be where you either have to get a newspaper, really dating myself, or watch the evening news in some cases to find out what's happening around the world. Right now, you happen in an instant. You can trade stocks in an instant from your phone. Remember, you used to have a stockbroker who had a license to do these things. Now you can do it by your phone. Listen, you could bet a sporting event while the sporting event's going on, right? In the middle of the game. You can actually bet. Before you had to have a guy. Remember? You got a guy? I got a guy.
You got a guy?
I got a guy.
Let's
I got a guy that's could take your bets for you. No, you don't need that anymore. Think about if you want something today, it's delivered to your door the same day. Life and data moves way faster than ever before. So when you're looking at the past and you're looking at for answers and how long it's going to take to get to this recession or inflation or prices to go up, look at life today. It's going to happen faster. Mortgage rates increased at a faster pace than they ever have. The housing rose at a faster pace than it ever has, right? More people with more money happen faster when we gave them money than ever before. The real estate inventory, not having inventory, happened faster than it before. Of some there was houses, now there wasn't. I see more inventory on the market today, and that happened at a faster pace than years past, which means more inventory at a faster pace, which means if there's more inventory, you're going to see price reductions at a faster pace, which means more buyers thinking they're getting a deal on homes at a faster pace. You'll hear things that you're going to hear is this home was listed for $900,000 just 2 months ago, and I got it for $810,000. Can you believe that? What a deal. Everybody likes to feel they got something on sale. And if you don't believe that, did you guys buy anything on Amazon Prime Day? Did you? Because you felt like you got a deal. You don't know what the actual value and still making money in some way. Life in the markets just happen faster. That's the world we live in today. Look, I'm a guy that's been in the financial mortgage side for 35 years. Nothing to me is a cycle. I think a cycle is meaning that it's going to come back to once as it was. But every market is different. And the reason the last happened won't be the reason for this to happen or the current or the future. What I do know is there are many, 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 many people who purchased homes in every market that were able to sustain each market condition, make their payments on time, build equity, and they have wealth today. They didn't completely know about inflation or recessions or the Fed rate, but they did believe in owning real estate as an investment for long term and wanted their own home as their home. You can listen to a lot of noise, right? And sometimes you just have to believe and trust it can work out better than expected any time before. So, in this podcast today, I hope that you kind of enjoyed my opinion, because really that a lot of it was, and some stats that I gave to you that were, just stats. So please don't email me and say I'm way off because you don't understand how the economy, you're way off. That's not what this was about today. It's just an understanding of no matter what market is, things are going to move faster than they ever have. And we all have our own perceptions. That becomes our reality. I have no intention to offend anybody's intelligence, because I'm not saying I'm more intelligent about the economy or recessions or inflations than everybody else. I'm just putting it away how it relates to real estate and where we are today as things are moving so fast. So this podcast was dedicated to my wife, who told me no one wants to hear about our life and calling audibles, right? which was my last podcast. So if you didn't listen to it, you go back and listen to that. She said, heck, I don't even know what Audible is. So stop talking about all the things that happen and how it relates to other people. Stick to what you've been successful. So with that, I'm going to say it's dedicated to my wife, and let's see if we get more subscribers with me talking about the market, the economy, the recession, inflation, and the Fed's raising the rates, which I do know a lot of being in the industry for quite some time. But let's see if on her request we can get it. So thank you for watching and listening. Please subscribe. It costs you nothing, helps me out a bunch. You can get more information on manginelligroup.com. I'd love your comments. Leave them. This week, follow your conscience and your beliefs. Don't allow anybody's perceptions to derail your beliefs. Go have fun and make dreams come true.